Good morning, Merlin. I'm Alan Pangbourne. I'm the CEO of Chesapeake Gold, and we have a very, very large gold-silver project in Durango, Mexico. By large, I mean over 20 million ounces of gold and 560 million ounces of silver in resources. We recently completed some drilling, and prior to that, we put out a PEA in August last year that showed quite an interesting project that only requires about $360 million and gives us an NPV of about 1.4 Canadian. So that would be a small startup project, 15,000 tons a day, producing 115,000 ounces a year of gold and about another 2+ million ounces a year of silver. That's part of our strategy of how we're going to develop Metates, and more than happy to discuss that with you here today.
Alan, thank you very much for the introduction. Good to see you. Good to meet you. We're both struggling with different situations at either end of this call. I've got a large number of bees in my office, and you've just come off the back of COVID, which I don't think was the mild cold that everyone says it would be.
No. Well, I guess it's better than some of the early cases of COVID. It was a pretty rough cold flu-like episode. So, but yep, slowly getting better. I was fully vaccinated, so I hope that was part of the reason it wasn't worse. But yeah, this is the first time I've got out of bed in the last 4 days. So,
my goodness. Well, we'll if you don't know the answer to any of the questions, we'll put it down to COVID fog, and we can always the brain fog. My goodness, my head was all over the show when I had got COVID 6 months ago. But good to see you up and running again.
Thank you.
So, Metates down in Mexico. You've just finished your infill drilling program. You're aiming for a new resource estimate at the end of this year. Is that right? You've done what about kind of 105 new holes, and you've been putting out some pretty nice numbers. Is that wrong?
No. So I guess it was. Let's go back a bit. I joined the company about 18 months ago.
Yeah.
We did a deal with a private company that I used to own, and backed into Chesapeake, took over management. And we did that under the concept of a totally different approach on how we were going to develop it.
Yep.
The previous project was this massive 3.5 billion autoclave, all singing, dancing, unbelievable. But, is it buildable? Yeah, it's buildable. Not by Chesapeake, but it's buildable. So we came in with a concept of two things, I guess. We believed that there was a higher grade core in it. And secondly, that we have a process that allows us to heap leach sulphides and then be able to leach the gold and silver after you've oxidized the sulphides. And I'd love to explain to you how that all comes together. And so, one of the first things we did, because the crux of the whole project is how well does this metallurgical process work on the Metates ore. So the first thing we had to do was drill some holes to get some large diameter core that I knew where it came from. I knew how old it was, right? And I knew what it represented and what we intercepted. So we did that, right? Drilled 5 holes, got the assay results back, and went, oh, wow, 20% higher grade. Not really sure why. A geologist that helps me with all of this stuff, Carl Edmonds, who I used to work with at SSR, looked through all of the obvious things that it could have been, change of support and this and that and the other, and we couldn't find anything that really explained it.
Sample size?
No, because the previous drilling, they were using half core for assay, and that's what I meant by change of support. When we checked that, we went, well, it's about the same mass per meter when you use quarter core on PQ versus, and I always get my numbers wrong. You're the geologist, you'd know. And half core on the next one down, whichever is the right letter in front of the Q.
HQ. I've got a really easy way to remember them all if you're interested. So BQ is the smallest, baby core. NQ is the one that we normally start with. That's normal core. HQ is heavy core, and I call PQ Papa core. So it goes Papa, heavy, normal, baby.
Right. So we did PQ. The previous drilling was HQ. Half core HQ is about the same weight per meter, apparently, as quarter core on PQ.
Okay.
So it wasn't that.
The
one we did make sure that all of our drilling was done as close to normal as possible as far as intercepting the ore body. So it wasn't just straight up and down. And so we looked at all of those things, couldn't work out why. So we figured it was probably real. So went back to the board and said, you know, all that money we got in the bank, can you please approve me to go drill another 16 holes? So that's what the additional 16 holes were that we released a week or two back now. And that was really a you know, your 5-spot program. There's the 4, put one in the middle, put one in the middle, put one in. And we stepped out a bit in a couple of places into areas where they hadn't drilled to some geographical edges or some geological edges. And so we put a spot in between to see how quickly it thinned or didn't, right? So, and it was also, again, PQ, and it was also, again, to give me material for later on in the test program. So it's all been focused around this test program. And it was really just serendipitous. And we went, 20%? I'll take it. I'm not shy.
Yeah, I think it might be useful. Have you got a cross section there? Because the ore is in two kind of main lithologies, isn't it? It's in kind of it's in a sedimentary package and in a intrusive package. And from what I could glean, it seems as if the grade was more underestimated in the intrusive than in the sedimentary.
Yes, that's right. That's right. And also we, you know, right back from the beginning, our approach to this project was, I need a credible project that I can build. If you look at my background, I'm a builder operator for my entire career. I'm not an exploration geologist. I'm a metallurgist by profession.
Yeah.
We tend to build and run things. Or as the geologist would say, and you put it all in the tailings dam after we spent all that time finding it. But you know, so and again, as part of my background, I used to run an engineering company, and so it was always about how can we make an economic project? How can we make an economic project? And in the case of Metates, we believe that the wide space drilling and the way they're building block models, and also what they were targeting this massive, large resource development opportunity that I think they really knew they would never build it. Somebody else would buy it and build it. So they wanted the biggest ounces. And you know as well as I do, when you start doing that, things tend to get pushed around a bit. And so high grade goes down, low grade comes up. Boundaries aren't quite solid.
You're essentially engineering with other people's money. In a sense, you're engineering other people's kind of execution. Whereas if you're engineering if you're calculating your own blocks that you're going to have to be mining, you treat them slightly differently to if you think, oh, well, someone else is going to mine this.
Yeah, that's a polite way of putting it. Yeah, you know, and that's a very good comment. I mean, I've built enough of these and watched enough of them go wrong to learn that, you know, a bit of conservatism never hurts. Starting small and then expanding is probably a better approach to things because, again, you know, you're risking your own money. I mean, I'm an 11% shareholder, for crying out loud. I've got a big vested interest that if we get to the point we build this, it's going to be right. Yeah. So, you know, we believed there was this high-grade core. The drilling wasn't done to prove that. The drilling was done to get met samples, but it showed that. And you know, we're in the process now. I've got all the drilling results to actually sit down with a geologist that I've known for a long time and trust, and go through slowly but carefully to make sure hard boundary, soft boundary, unidirectional, bidirectional, what are the controls? What are the limits between the breccia and the SEDS and the massive intrusive? And actually build it so that you can sit there and say, does it all hang together, both X, Y, and Z, as you turn the solids around? Or are they gaping gaps or weird shapes? Donuts. And you go, yeah, right. Donuts exist in geology. Yeah, they do on a mega scale. They're usually called porphyries. Yeah, but
are you going to are you resampling the historic drilling to get a?
I haven't got to that point yet. That's an interesting question. We may. The new drilling or the newer drilling, the last 16 holes, and you'd have seen it on the press release, gave us that same 20% increase. Yeah, there were 5 holes in between that were only 10 or 11%. Where's it all going to average out? Look, we've got to do the work, right? And that goes back to your comment about if you're going to build it, you treat it differently. Yeah, we've got to do the work.
Do you have that cross section handy?
Yeah, there you go. So,
okay.
Don't ask me a bunch of complicated geological questions because I ain't a geo.
That's fine, and you've got COVID, so both of those reasons. So that PEA pit, that's based on 15,000 ton per day, and is that the 205 million ton pit that you're talking about there?
That sounds about right. Yeah.
That was so. Yeah, that I think that was the one that that's the mined tons. Those are the tons that get mined in the PEA. So that's about 5 million ounces, kind of give or take.
Give or take. That's about right. And that's treating the SEDS as waste.
Oh, is it?
Yeah.
Oh, I didn't get that. I didn't understand that.
The SEDS in the pit calculation, the intrusive breccia are run as ore, and the SEDS are treated as waste but stockpiled separately. And waste is waste. Yeah, low grade below cutoff is waste. And that gives, if I remember my numbers again, I think it was 2-to-1 roughly strip ratio, which that slide shows it pretty clearly. That's about a 2-to-1 strip if you take all the light blue as waste, or stockpile it. Yeah. And again, it all comes back to the same thing. What is our focus? 15,000 tons a day and 5 million ounces gave me a 31-year mine life. And most people will sit there and go, Alan, expand it. You go, whoa, hang on, guys. There's a reason it's 15,000 tons a day. And the reason it's 15,000 tons a day is 15, 17, somewhere in there, is about as big as you can go with a single line jaw crusher. As soon as you go up to 20, you jump to a baby gyratory. The problem is on $1 per ton basis, capital installed, that gyratory is almost 3 times the cost to install as a jaw crusher of the same sizes.
Yeah.
So if you're going to go to a gyratory, go big or go home. Yeah.
Before we drop this slide, can I just ask? So the highlighted drill hole with that intersection of 432 meters of 1.15 grams.
That's nice, isn't it?
That is nice. And effectively, I did, when I looked up the 205 million tons as your kind of resource that gets mined in the PEA, it said that there was 0.75 grams per ton gold and 14.6 grams per ton silver. I kind of rounded that up to 0.8 grams gold equivalent. But if you've got an extra
it's 20, a bit higher than that. Yeah. But yeah.
If you've got an extra 20%, you're looking at 1 gram gold.
No, I think you'll find the original intrusive, and I think it's, I have to go.
I mean, I think the point is that if you've got if you can get between a 10 and a 20% upgrade of your resource in the intrusive, that really, really matters.
Oh yeah. No, it's huge. No, it's huge because it's free money straight to the bottom line. The pit won't change. The strip ratio won't change, but your value dollar per ton of rock has just gone. I'll show you the other slide. I believe that the high grade core initially looked like it was about a gram per ton equivalent.
Right.
Yeah, it was about 75.75 grams per ton gold and 16 silver. And that gives you about 1. You add 10 to 20%, you add in 0.1 to 0.2. Well, gold's $50 a gram. Yeah, roughly.
Yeah.
A bit higher than that now. Maybe close to 60. Well, it was yesterday. I'm not sure today.
Yeah. I know, right? Scary days.
But we whatever, make the math easy. Call it 50. Yeah, call it 50. We get a 10% increase. That's $5 a ton.
Yeah.
It goes to 55. 20%, it goes to 60. That $5 to $10 all goes to the bottom line.
Yeah.
It all goes to the bottom line because whatever recovery number or whatever, that's all proportional. Yeah.
Yeah.
So you're right. It makes a huge difference.
I did notice that in your presentation you show the pre-tax number and and an NPV5 as well. And
part of that is tax is a funny thing, and it can distort so many things depending on what are your losses. Is there double depreciation? What things can you deduct early in the piece and all the rest of it? So if you can't get a pre-tax number that's worth looking at, then you're in trouble. And the tax thing, the financial engineers seem to be able to do wonderful things at times. So that's why we use that.
You were looking up a slide on the grade on the resource table.
Yeah. Well, it's not on the resource table, but this one. This one here, that's what we thought it originally was. So the part of it is a timing thing as well. We originally thought in that blob, there was 166 million tons, 0.76 and 16 grams a ton silver, which is almost smack on a gram. So that's just what I wanted to clarify with you. Okay. And so then you take that 10 to 20% uplift on top of that. Yeah. And so you get to go from $50, $60 a ton up by $5 to $10.
Yeah, funny enough, I wrote down that number 166, but I've also got 205 somewhere else. But anyway, that's all fine.
That is probably off of there somewhere.
Never mind. Let's. Yeah, anyway, it's still a big number,
a lot.
and it's a lot of rock, and it's still around 5 billion ounces.
It's basically 31 years at a gram plus a ton equivalent, producing 130,000 ounces gold equivalent a year as a starter project that you then expand up from.
And it's sulphide all the way.
Yeah. That is
a skin of oxide.
Well, you can see it in the pictures. That brown stain. Guess what? That's the oxide.
And talk me through the metallurgy and the mineralogy, and is it easy? And I mean, there's so much going on in your presentation on the processing in terms of the approach to copper ore, the approach to traditional gold, silver ores, alkali leach, acid leach. Can we just start at the top end, which is how does it present itself?
Back to fundamentals. Firstly, it is predominantly pyrite.
Yeah.
And the gold and silver is refractory. And refractory is a dirty word, but also it's very lazily used by everybody in the industry. And when I say that, I mean there's at least 4 types of refractory.
Yeah, I mean, tell me how your ore is refractory. It's a varied thing. It's a bucket.
Yeah.
It's a bucket.
Right. So the problem with that is people go, oh, that ore's refractory, and you go, cute. Which type? And they just get this glazed look. They get COVID fog. And so first you've got to understand what sort of refractory have you got, and the four types that you see commonly are sulphide refractory. So the gold and silver is in fractures around in the pyrite crystals. Silica locking, where the particle of gold and or sulphide is surrounded by silica and you can't get anything through. Carbonaceous materials that preg rob, which is a totally different type and different issue. And then things like tellurides. And then in the case of silver, you get all sorts of weird silver mineralization that sometimes it's in feldspar, sometimes it's these silver salts. The silver mineralogy is just a class to itself. So you take those four and you go, silica locking, the only solution is grinded plug dust. It's a mechanical entrainment issue. Carbonaceous shale and preg robbing, good luck.
Roast. You can roast.
Roast, yeah, roast. Autoclaves don't usually work if it's strong preg robbing. Sometimes if it's weakly preg robbing, they will.
It's never really fired up, has it?
Sorry?
Syama has never really fired on all cylinders, has it?
Well, and you know, the only couple of roasters in Nevada, aren't the best either. So, and then telluride, the only solution I've ever seen is the same as the refractory carbon: stick it in a roaster and destroy the lattice. But whichever, and then sulphides, the only solution to that is destroy the lattice. So they're a bit similar to the telluride. Let's focus on sulphide refractory, which is what we very strongly believe we have at Metates. And previous test work around autoclaves has shown that. We've got sulphide refractory. So there's two very fundamental, simple concepts that, as a geologist, you will understand very well. Firstly, sulphides don't want to be sulphides. You expose sulphides to air and water, and what do? They turn into this nice, muddy, brown, red stuff and wash down the river, usually. Yeah, and all the environmentalists get upset, and they usually call it Rio Tinto or Rio Amarillo or something like that, right? Which means red river or yellow river. But sulphides don't want to be sulphides. It's an industry-wide problem, and I mean out across all sulphide deposits. It's usually called acid rock drainage, and we spend billions of dollars around the world every year trying to stop it. Yeah, because it's usually the waste dumps. And so that's the first concept behind what we're trying to do. Sulphides don't want to be sulphides. And I think we can agree that that's true. The second one is that size is inversely proportional to time. So the time it takes to oxidize is inversely proportional to size. All right?
You're effectively trying to increase the surface area so that the air and the water can access the grain over a larger surface area as possible. So if you've got a big sphere, there's the smallest amount of surface area, but if you've got multiple faces and small grains, you've got more surface area, therefore the reaction is quicker.
And if you look at the two extremes, oxide ore bodies are always on top of sulfides. Like, you're the geologist, tell me if you found one that's the other way around. Yeah, but and that's generally because they oxidize from the top down. Yeah, because water flows from the top down. But no, you can wait, and the ore body will eventually turn into an oxide, or it'll get washed down the river, and then you go look for an exotic. But that takes millions and millions and millions of years. At the other end of the spectrum is what we do at the moment, which is we crush, grind, float, and then put it into some sort of lattice destroying process: smelter, roaster, autoclave. And they do it. Bugs have been used at times, and it will work if the grade's high enough. I actually worked on 2 biox plants when I was in Signet. One was biox, the other one was biotech. I think it was biotech, but 2 slightly different versions of the same process. Basically, thio and ferrobacilla oxidizing the sulfides, bumping the arsenic up from 3 to 5 so that it didn't kill them, and then precipitating the ferric arsenate out as scorodite, which was a disposable arsenic product. So that works. Hasn't really taken off, and it hasn't really taken off, I think, principally because some of it is, well, we've already got the autoclaves. Some of it is you need quite a reasonable grade for that
you do.
complex process to actually stand up. Yeah. And so it hasn't been the boom that everybody thought it would be in the 90s.
When I spoke to the Ashanti guys at Obuasi, they said it just kind of lops 4 grams off the. I mean, this was back when the gold price was much lower. Is early noughties when the gold price was $300-400. They said, we lose 3-4 grams just to in the cost of running the biox.
Yeah, and it's the oxygen, it's the heat transfer, it's the neutralization costs. And at the end of the day, the neutralization costs, whichever way you look at it, is what drives the operating costs, whether it's an autoclave or even a smelter or a roaster. You still got to capture the damn acid and get rid of it. So you can go fine, or you can wait millions of years. There's an obvious point in the middle that nobody really spent a lot of time working on, which is a reasonably fine crushed heap. And so you sit there and go, well, the next obvious place on that size-time relationship is half an inch, somewhere around there. And if you look over the fence, which a lot of the industry doesn't do, the copper industry has been doing this for 30 years.
Oh, I was just about to say, because I've worked on a Chilean copper heap leach where they put it through a primary crusher, and it's actually a salt process. They add in salt in, they spray on sodium chloride in solution with a bit of acid, and it really aggressively corrodes the grains, and post agglomeration they can whack it on the thing, and the recoveries are just extraordinarily much better.
Which one was that?
I was Tres Valles. No, it was
Tres Valles. Okay, that's the newer one. Yeah. So, all right, another piece of the story into why I believe this will all work. In 1991, I met Esteban Domich, and I don't know if you've come across him. He is one of the more renowned metallurgists in Chile, and back in the early 90s, they were all working together at Pudahuel, which is just outside of Santiago. In fact, when you drive from the airport to Viña, you literally drive past it on the right-hand side just before you go into the tunnel, if you know that road well enough.
Yeah, I do.
And so I saw that, and when I first went to Chile, they were all excited that they were getting sulphide copper to leach in a heap leach. And we go, wow, okay. So because I'd just come out of the engineering company and was looking at gold and bug leaches and all that sort of stuff. So I was really interested in, this sounds really cool. What are they doing? So, and I've watched it over the years. And then, surprise, surprise, in 2002, I ended up as the project director for Spence. Spence at the time was the biggest sulphide heap leach in the world. Yeah, when we first built it, we were doing 50, 60,000 tons a day, 200,000 tons a year of copper, sulphide oxidizing heap leach and recovering the copper in SX-EW. We had an oxide heap and a sulphide heap. Interestingly enough, your comment about the chlorine leach, I saw all of that test work in 2002 on the Spence ore.
Yeah.
At that time, we were not confident enough to risk $1 billion project on a novel process. Okay, so it was a risk-reward thing. We knew the biox would work. We knew that we had all of the test work and all of the metallurgical stuff and all of the things to get through BHP's torturous process, because I helped write some of the process and I'd been through it before. And so we didn't take that leap of faith. However, that work didn't stop. And Cerro Colorado switched to salt now. Spencer switched to salt. Tres Valles. Machia was actually the very first one. Machia was running salt back in the early 2000s. if not in the late 90s. And if you actually go back to the fundamentals and draw up your EH-PH diagram for a copper, hydrogen, chlorine, iron, sulfur system, there's this funny little corner at about pH 1.5 where a cuprous chloride couple exists. And that's what's oxidizing the sulfides. So the same as the ferrous-ferric couple that's catalyzed by the bacteria to switch backwards and forwards and bump ferrous back up to ferric, after it's oxidized more iron. There's a cupric couple, chloride-based, that exists around that same pH range. Now, the interesting thing about that one is you're now in a chemical control, not a biological control. Chemical controls have a couple of advantages. One, they're faster. And two, they're controllable.
Yeah.
They don't suddenly decide to go to sleep or die on you because they're not happy.
You're driving the bus.
You're driving the bus. So take all of that mishmash and all of that fundamental concept understanding, bring it over to the gold industry. In the copper industry, we don't just oxidize the copper minerals. It's not that selective. It would be beautiful if it was, but it isn't. It oxidizes the pyrite too. It does a damn good job of it. There's all this iron everywhere, right? I mean, that's the source of your ferrous to go to ferric. Yep. There's all this iron that's oxidizing, and the bugs are oxidizing it quite merrily, or the chloride system is also oxidizing the iron. So you've got, that your underlying fundamental comments that I made earlier, size is inversely proportional to time, sulfides don't want to be sulfides, are correct. Yeah. And if you don't believe me, go look at the copper industry. There are at least 2 different chemistry sets that operate. Yes, it's acidic, but that's a chemistry issue. That's not a physics issue, right? So you split it into the 2 pieces.
Is Alderley, the fact that you bought Alderley, is that a key part of the puzzle, or did you, when you came into the company, did you bring your knowledge from?
I was Alderley.
Oh, okay.
Alderley was, I was the majority shareholder.
Okay, so Alderley is your experience in the copper industry and the
license to a different chemistry set we believe works in the gold industry.
Okay, so
next step forward, will sulfides oxidize at half inch? Yes. Does it take a long time? Yes. Right? You've seen the copper ones. I mean, I don't know what Tresvaye's leach time is, but I know what Spence's was, and it was quite a long time. But it was still more economic than building a concentrator and a smelter and all the rest of it, right? So it all comes down to economics. It's the time value of money. So we all know that all works. So now it's, can I find a chemistry set that allows me to work in the gold industry? So what are the constraints on the gold side I need to comply with so as I don't get in a mess? So go backwards again and look at who tried and why did it fail when they tried to use biox, not in a tank, but in a heap leach. And people did try. Yeah. So again, back in the 90s, a couple of companies and one very large gold company tried, and they couldn't get it to work. And the problem with it is when you go down to pH 2, you dissolve all sorts of stuff. But the even more fun thing is when you've done that and you've oxidized all your sulfides and you've got all this iron stew, and you have to come back to pH 10.5 to be able to put cyanide in to get your gold and silver, you create the biggest uncontrolled precipitation event you have ever seen. And one of the problems that you also create that they've seen in the autoclave circuits, because somebody can sit there and say, but they do that in the autoclave circuits. What's your problem? In the autoclave circuits, yes, they do that in the autoclave circuits. However, they have always struggled with jarosite and it absorbing, in particular, the silver. It locks up the silver because jarosite's one of these amorphous iron hydroxy, iron plus any other damn metal that will precipitate, and including silver. So you often see PV claims they've got a lime boil that works. Rumors in the industry suggest that it may be not quite working as well as they thought it would. So you still have that issue about as you go from pH 2 to 10, you precipitate everything under the sun. So one constraint, don't move the pH. Hence alkali, right? So can I find a chemistry set that will allow sulfides to oxidize in the presence of air and water at pH 9.5, 10, 11, somewhere around there. So as I don't have, if I move it, I don't move it a lot, so I don't get this massive precipitation event. So avoid the precipitation event, right? That's what we've got. So the physical piece is a walk in the park. Crush it to 1/2 inch. Will it oxidize in a heap environment? Yes, yes. Does it take time? Yes. Chemistry. Have you got a chemistry that allows the sulfides to oxidize in an alkali environment that doesn't produce a massive precipitation event that absorbs all the silver and potentially locks up the gold?
Okay, so where are you in that process, and how much did you do for the PEA, and how much have you got left to get your test work done for the?
So in the PEA, and I think we were pretty clear in that we had very little metallurgical test work.
Okay.
Right. We had some preliminary tests that we did before we did the Alderley deal. And the reason was because not all refractories are the same.
Yeah, you wanted to test some.
I wanted to make sure that it wasn't silica locked or something else equally as nasty. And that was positive. And so then once we done that, we did the deal. Once we did the deal, afterwards, I found out that they had some old samples from the original test work. So they were quite a long time old, and I didn't know how they were stored, and I didn't know exactly where they came from, hence the new core. But what we did do was we put up this column. Where's the share screen again? So this one. You're the geologist. Tell me the stuff on the right hasn't oxidized.
I can't.
There you go. So that is the same column taken over whatever that is, 6 months or something. It kept going. You'll never see the results from these columns simply because I don't know the precedent of the sample. And so until I get my results from the test work I'm doing at the moment, yep. I'm not putting anything else into the market until I've got a coherent set and I know exactly what I'm looking for.
Thank you. Could you drop that now?
Yeah, sure.
Let's go.
I think that's a cute slide. I really like it. As a metallurgist, I get really excited about that one. Sorry, it's not a core photo with
no. I'm a broad church geologist. That was a 3 month, May, June, July, August. That was a 4 month.
Yeah, that was column. About 4. It kept going after that.
Have you started your new columns? And
yes.
How long are you going to let them run for?
Okay, so the Met test program that we're carrying out at the moment, it's focused on intrusive and intrusive breccia separately, and it's focused on producing the data to support the assumptions that are in the PEA. So that's 1/2 inch crush, 70+% gold recovery, 70 something silver recovery, and within 180-day oxidation time. And so the process is crush it, agglomerate it with the alkali, stick it on a heap, air injection underneath, oxidize it for up to 180 days, rinse, pick it up, put it onto the permanent heap lime cyanide.
Right.
The lime cyanide, we're running the columns in that part of the cycle for another 90 days. So one column from go to woe is effectively nine and a half months.
Yeah. Yep.
Right. Which is bloody slow. And the investors don't have what you call patience.
No.
Yeah. No. As I'm finding out.
Yes. Well, we've had a good discussion about metallurgy, but there's another aspect that I want to talk to you about. So effectively 9.5 month gestation period on that met test work, and you started
October, November.
Okay. By the time you get are you going to put some of this most recent bunch through? So it'll be rolling, will it? It'll be rolling results coming out.
Yeah, because not so in that bunch. So that's the overall. That's the longest. What I actually want to generate at the moment is a time oxidation gold silver recovery relationship curves.
Yeah.
So how fast does it oxidize? To what oxidation level do I get? And with that oxidation level, what gold and silver recoveries do I get? So what I've actually got running at the moment, I've got 16 or 18, I'd have to go count them again, columns in a lab here in Vancouver, which I wander off every couple of weeks and just go and check the paint's drying. We're running what I call a zero. So zero pre-oxidation. Just put it in the column like a dummy, run it for a typical gold cyanide 90 days, right? That gives me, do I get anything? Yes. How much is anything?
Your baseline relative to the pre-oxidation.
Yeah, my baseline. So what improvements am I seeing over that? And then with that, on the same composite sample, so we made a composite of intrusive and then composite of intrusive breccia. Run a zero on each one, just standard lime cyanide. Yeah. Then 60 days, 120 days, 180 days. Yeah.
Yeah.
I've got a duplicate in each set. So as people can't say, well, you haven't proved that it's reproducible, even though I've actually got 4 duplicates and they're running identical columns, identical speeds and identical flow rates. But you got to be able to tick the damn boxes. No, look. I'm coming from a different place to a lot of the juniors. I've been through independent peer reviews of some of the best in the world, and you know full well what they're going to ask you before they get there, right? So you may as well just do it at the beginning and get it right. And also, I'm going to need to raise money if I'm going to build it. So I know full well they're going to get some metallurgist who consults to the banks. And what are the first things he's going to ask? Reproducibility, variability, ore types, depths, all those sorts of things. So you may as well make sure it's in the Testwork program and just keep working through it.
Yeah.
So the first set of columns are really focused on time, oxidation, gold, silver recovery, and they're running at the moment.
Yeah.
As my 0 days came off, I put 2 more columns on. When my 60 days came off, I put 2 more columns on, and so on and so on and so on and so on. So yes, they're back to back, and I just keep rolling through them. But until I get that last set of 180 days plus the 90 days, and I've got a set of curves that show 0, 60, 120, 180 gold, silver recoveries, you can actually put it in a 3D surface. And with some of the preliminary results that I've got, I did that, showed it to the marketing guy. He took one look at it and said, I don't understand this. Okay, I won't do that then. Don't get too cute. It's the engineer coming out.
Well, I look forward to seeing those when you're ready to start talking about the results as they come through. I think that'll be a key factor. I'll also be looking forward to seeing the new resource, and I expect you will have to go back and resample some of your core. But that's just that'll be down to the QP and your resource geologist. But instinct says that you're probably going to want to run some of that again. Yeah. The key thing, and the kind of thing in the market at the moment, the big the elephant in the room is rising costs.
Yes and no. Been there, done that one before too. 2002 through 2004 was when I built Spence. When we started, we approved the project on 90-cent copper. When we started up, it was $4. You know, the trick with rising costs is please make sure that the last study you do and the last estimate you do is not an updated estimate. Go back to square one, requote everything, ground up, rebuild it, and then approve it and get building and buy everything as fast as you can as soon as you get approved, right? And that way you lock everything in to the quotes that you got and you don't get this escalation creep.
Yeah.
Which, you know, when you get into a higher inflation environment, and some of us have worked in wonderful places like Argentina where it's 40% per annum, you learn a few tricks about how to not get burnt.
Yeah, but there's a difference between an inflationary environment where the metal price is rising as well, as happened from 2002 to 2007. You know, the margins effectively stayed the same because the metal prices were rising as much as your underlying costs. Whereas what we've got this kind of rather unhealthy environment where just at the moment,
no, you're seeing
coming down.
No, you're seeing. So the curves lead and trail each other, right? So you're seeing inflation in equipment and stuff driven by, you know, copper's $4.50. Iron ore, coking coal is $500 or $600 a ton. Yeah. It's ludicrous, right? So that transfers into steel prices.
Yeah.
So steel, when at the end of the day, a project is four things: labor, steel, copper, and concrete. That's it. When you take it down to its fundamentals,
you can add in diesel.
Yeah, energy.
Yeah.
That's it. And they're all way up. If you're looking at it from a gold perspective, you go, oh, but we're getting squeezed. Well, hang on a minute. 2 years ago, when was it? When did I sell Guyana? 2 years ago. Gold was bumbling around. We got to 1,500 and we were happy.
Yeah, it was 1,350 for a long time, 1,350 to 1,400.
Exactly. So it's gone from 1,350 to it touched 2,000. It's back at
1850, 1860. Yeah.
Right? They got to stop their whining. You've seen the commodity price increase. You're now seeing 2-year lag, 3-year lag, it coming through in the equipment prices. You're also in a situation where COVID pushed all of the low-level labor into unemployment, and they found other things to do so that they could survive, and they ain't going back to serving tables, right? And so that's pushing labor costs up. So it's all coming up together, right?
Yeah. Okay.
So that's
really
where
interesting.
That's where it comes back to. Before you build, make damn sure that the last estimate you did was not a factored update, because that's what they always do. And if you look at all of the projects that got caught with their pants down in 2004 through 2008, before the 08 crash, every one of them was a old estimate that was updated.
I look at the Chesapeake share price, and it's a very similar path to other companies, which is kind of a peak in July 2020, and then 2 years or 18 months of
we're just following the metal price.
It's
you pull up the GDXJ, and we're not far off it.
So
depending on your time frames. Yeah.
So, do you have destiny over your? Do you have control of your own destiny, or are you just following the GDX? You know, what's going to be the catalyst that drives you to assist that bucking the trend of the GDX?
The Met Testwork. It's that simple.
Yeah,
it's that simple. Until you can put some results into the market around the Met Testwork, and even then, there'll be people sitting there saying, "Oh, I don't know. You know, what about those in situ copper guys? That's not working." Or what about? But you could say the same about heap leaching oxides. Believe me, in the late 80s, I built my first heap leach. You name it, we got it wrong. I blocked my carbon columns. I blocked up all my drippers. I blinded off the top of the heap. I had part of the heap slump on me. Oh, it was a beautiful mess. Yeah, but number 2 was an improvement, and number 3 was a gangbuster.
Someone else has paid the school fees. Now, I know you're a metallurgist and I'm a geologist, but I would also say that an upgraded resource would potentially be a value catalyst as well. Potentially,
you know, and you do see a bit of a bump each time we put out a news release. It'll go blip and then blip. Sometimes it won't even move. But you know, the underlying key is, can you oxidize pyrite in an alkali environment at a heap leach size? That's it in a nutshell. And if the answer is yes, don't just think about Metates. There is a mountain of deposits out there that have got some, none oxides left on top of quite significant sulphide ore bodies.
Well, I think at that juncture, we should leave it on a lovely cliffhanger, lots of upside. So, Alan, thank you very much. It's been a rollicking and very entertaining 45 minutes or maybe an hour. I look forward to hearing from you as the results come through during the course of 2022.
Thank you.